Welcome to FinTickAI's market analysis for March 6, 2026. Both the Nifty 50 and Bank Nifty closed lower, down 1.27% and 2.02% respectively. India VIX surged over 11%, indicating a sharp rise in market volatility. The Nifty 50 experienced severe liquidation, erasing the previous session's relief rally with a 315-point drop. This was driven by macro catalysts including geopolitical fears, a spike in Brent crude, and heavy foreign institutional investor distribution. The structural shift confirms an active markdown cycle. Technical signals show some bullishness. Oversold oscillators hint at potential mean reversion, and localized selling exhaustion is visible near the 24,300 support zone. Neutral signals suggest an active trend hasn't reached its climax, with a long-term buffer preventing an immediate total breakdown. Bearish signals are pronounced. The MACD is expanding aggressively downwards, confirming sellers are in control. The RSI fractured its median equilibrium, and volatility expanded with the India VIX spike. Nifty is now trading severely below its key moving averages. Key Nifty 50 levels include immediate resistance at 24,600 and a breakdown level at 24,100. Our probability analysis gives a 65% chance for a bearish scenario, driven by VIX expansion, confirming a bearish bias with high confidence. Today's news impact is overall bearish. Geopolitical conflict is pressuring India's deficits. FIIs offloaded over 3,752 crore rupees. In anticipation of a slowing U.S. non-farm payroll report is prompting risk-off behavior in emerging markets. Bank Nifty experienced a catastrophic breakdown, plunging 1,205 points. Private banking heavyweights were used for algorithmic FII cash generation. The index sliced through multiple psychological bases, indicating high-velocity capital flight. Bank Nifty technicals show limited bullish signals with extreme compression, suggesting a temporary relief bounce. Bearish signals dominate, a runaway downtrend confirmed by MACD and a death cross. Neutral signals show historical macro supports haven't been completely wiped out yet. Key Bank Nifty levels include resistance at 58,500 and a major psychological breakdown point at 57,000. The probability scenario is strongly bearish at 75%, with very high confidence, fueled by FII extraction and rising global bond yields. Looking at the top 5 NSE market gainers, Bharat Electronics led the charts, up 1.8%. Other significant gainers include Reliance Industries, ONGC, Sun Pharma, and NTPC, all showing positive movement on good volume. The top 5 market losers saw significant declines. ICICI Bank, Eternal Limited, Shriram Finance, Axis Bank, and Ultratech Cement all dropped, breaking key support levels, with ICICI Bank down 3.3%. In the 52-week high watch, Vardhman Textiles broke out of a falling trend channel. Other stocks showing strength include Sundaram Finance, Sai Life Sciences, Pashupati Kotspin, and Sancode Tech, indicating continued momentum and price discovery. Stocks on the 52-week low watch include KPIT Technologies, which suffered a structural breakdown. Amja Cements, ACC Limited, Burger Paints, and InfoEdge also experienced severe technical degradation or violent breakdowns. Our top trending stocks, 1 through 3, include Mazagon Dock, with a bullish breakout on high volume. NTPC shows bullish continuation, utilizing moving averages as support. Sagility India experienced a bullish reversal from an oversold territory. Rounding out the top trending stocks are Tejas Networks, showing strong bullish momentum and validating a higher high structure. Sun Pharma exhibits defensive accumulation, successfully defending demand zones and acting as a low beta safe haven. Major global events include the anticipated drop in US NFP data, forcing preemptive emerging market de-risking due to recession fears. Additionally, West Asia escalation, specifically missile strikes disrupting the Strait of Hormuz, drove Brent crude up 2.53%, destabilizing equity sentiment. Please remember that investments in the securities market are subject to market risks. Read all related documents carefully before investing. This probability-based analytical outlook is for educational purposes only.